Okay, so today we will be backtesting GBPUSD in the 2017 year. So here we are on the daily time frame. I have already erased basically all the chart data, so we can't see it because it's very important. You basically do not see what is happening, otherwise you are basically cheating. So basically you have nothing to win, okay? If you cheat yourself, you're basically cheating yourself if you see what is happening. So here on GBPUSD, from a daily perspective, what do we have at the moment? Is there anything that we can do? We can do nothing because the market has already created a higher high, and at the moment there is nothing we can do. Let's go on the weekly and see what we have on the weekly. So from a weekly perspective, you can clearly see that at the moment there is not much you can do. Even on the weekly, situation is not very clear. The market has created a double bottom. So let's see what will happen. Let's go on a daily time frame and keep playing to see if we will get some kind of opportunity. For example, an ICI strategy. So at the moment, what it seems is that we might get an ICI to the upside. Okay, we might get an ICI to the upside. Let's go on the weekly and see if on the weekly we can be looking for longs. And it seems that on the weekly we could be looking for longs because the market has created a double bottom. Plus, if you look at the market, you have this information. The market has already broken back above the neckline, which was at this area here. So on the daily, what you can clearly see is that the market has made an impulse correction and started another impulse to the upside. Let's go on the 4 hours and see what we get on the 4 hour time frame. So on the 4 hours, as you can see, there is one main problem. If you take your Fibonacci from the low to the high, which will be the daily correction. So as you know, when you're searching for target for the ICI, you take your Fibonacci from the low to the high. The minus 27 is here. The first strong number below it is here, 1.2720. So basically our only way, let's see if we can get a 1, 2, 3 rest to the word to the overall upside target. So basically, let's look at the strong numbers. We have 50, 35. 50, 35 is the strong zone at the moment for this long, which is here, which is aligning with this structure area that you have here. You have support here. Again, this resistance that is turned support. Around this area, we can be looking for longs. But if we take our long from here, for example, then our stop loss needs to be all the way below. Our take profit is limited, so we don't even get a 1 to 2 because the stop loss needs to be at least below the 78, at least below the golden ratio. And anyway, we don't get a 1 to 3, so we cannot take this long. We must leave the market, even if the market will continue to the upside, because on the daily is a clear ICI. Okay, on the daily is very clear impulse correction and impulse, but we don't have a 1 to 3, so at the moment we cannot take this trade. Okay, so the market went almost to hit the target and then reversed, creating a perfect double top. Now at the moment, let's see what we get on the weekly. So on the weekly time frame, what you can clearly see is that the market has created a W formation. You can see that the market went down, made a retracement, made another push down, and then created this W formation. So at the moment, we're expecting a push to the neckline. Now, where is the body of the candle? I will just hide this so that basically we can see where the neckline is. So the neckline, as you can see, is here. So the first strong number above, so this is 1.2335. The first strong number above is 1.2350. So we're expecting the market to make a push to this area, given the W formation. Let's go on the daily. On the daily, we have a clear double top. So again, we're expecting the market to make a push to this area. Let's go on the 4 hours and see if we can take advantage of the WM strategy that we have here on a GBPUSD from a weekly perspective. So what you can clearly see is that basically the market has already went for a retest of an important level. Why? This level here is extremely important. It was previous support, which is now turned resistance. So basically, from this area, the market is supposed to continue to the downside. It has already retested previous support, now turned resistance. So basically, since we were monitoring price action on the daily time frame, we didn't see this, because basically when you switch between time frames, it will already give you the price action. But this is what we had at the moment. So when the market basically broke to the downside, this is what we had. Now, obviously on the daily, it will keep shifting to the downside. That is how the reply tool it works on TradingView. But overall, this is what we have for GBPUSD, a weekly WM strategy on the daily double top. On the 4 hours, the market is clearly in a bearish environment. The MACD is crossed below the zero and the EMAs are crossed for short. And this is the clear area. The market has printed a clear green candle showing that we have support here. Then it broke to the downside. So on a retest of this area, we can take a short. Let's look at what kind of numbers we have. So it's clearly 2035. So we are expecting basically the market to retest this area and then continue with our push to our overall downside target. Now, the overall take profit, the overall stop loss for this trade, how should we take it? So we don't know where the market will stop. Okay, yeah, we saw one candle, okay, but that is because the reply tool how the reply tool works. But we don't know what the next candle might make a spike and then basically continue with the push to the downside. So we need to use the widest stop possible. So let's use a stop in this way, since we are having a 1, 2, 3 to the target. So as you know, yes, the market has already hit. These are the 2 candles that we were seeing, but clearly. So now, even if the market makes a spike to the upside, we will still be fine because our stop loss is above that level. And if our stop gets hit, basically it means that overall we have a change in structure, because this resistance will become support. So this is looking quite good. Let's see if the market will melt over or if it will break to the upside. Okay, so it seems it started to break. At the moment we have again support to resistance at this level, which should hold the market. Okay. So as you can see, the target hit. So basically the WM strategy from the weekly time frame provided us with a good opportunity. The market went for a retest exactly of the neckline of this W formation. So at the moment, everything is good. Let's continue with our testing and see what kind of price action the market will show us here on the daily time frame. Because on the daily, it's quite easy to see if there is something interesting or not. So let's see what we have here on the daily. So on the daily at the moment, nothing interesting. We had this M formation. The market is now at the neckline area. You don't know if it will break above, if it will break below. So not much we can do at the moment. Okay, so now the market is starting to print out some interesting things. Why? Because basically what you can see at the moment is that overall the market created a nice impulse. And now that that price action developed, you can clearly see that the market is basically creating a correction. So it is quite clear that what is happening is this, okay? And you expect the next impulse to the upside. So at the moment, you have an I strategy to the upside. So we can go down on the 4-hour time frame and look for a potential long. Also, if you take your Fibonacci from the low to the high of the impulse, basically you will see that the market is rejecting the fibs, the 78.6 and the 61.8. I already knew this because basically by looking at the market, you can clearly see if the market is creating a higher low. If the market is creating a higher low, then 99% of times the market will be rejecting higher low fibs. That is how the market works. So if you see the market that starts to create higher lows, it will probably be creating higher low, touching the Fibonacci levels. So let's go down on the 4 hours and see what kind of entry we can take. So on the 4-hour time frame, you can see that at the moment the environment of the market hasn't shifted yet. The MACD is still below the zero and the EMAs are still cut for short. Now they're cut for long and the MACD is above the zero. Perfect. The market changed environment right now. So we also clearly have previous resistance turn support at this level, so we can take our long from here. Just quick check at the strong numbers. We're in the 65 strong zone, and yeah, I mean it looks quite good. Let's use our Fibonacci. We can use it from the low to the high, and our stop loss must be below the 0.786. And regarding take profit, you already know it. We will take our Fibonacci on the daily retracement, which here on the 4 hours is already clear to identify. It will be the lower low and the higher high and the highest high. That is basically the previous leg on the daily time frame. Is pretty simple. We already saw the daily time frame, and overall this will be what we have. Basically a 1 to 4.8 risk to reward. Let's see what happened. Okay, so the market went straight down and created a very nice impulsive phase. Let's see. At the moment the market definitely looks bearish because it has broken below the support area. So basically the market broke to the downside. Let's see what will happen. Okay, so it seems actually we were saved because the market stopped at the 78.6. That is why it's very important to put your stop loss below it. So it seems we were saved, and at the moment we can be risk-free on the trade. Let's see if the market will hit our target or if it will be a break-even trade. Okay, so it seems it will definitely be a break-even trade. So this ICI to the upside ended up being a break-even. Perfect. Let's continue and see what is going on. Let's see if something changed also on the daily time frame. So definitely yes, the market broke back below the support, which is now turn resistance, and the market is starting a nice push to the downside. So at the moment I want to see what is going on also on the weekly. So what happened on the weekly? So what happened on the weekly is pretty clear. The market has a left shoulder here, a head, and the possibility to create a right shoulder and make a push to the upside. Now this target is probably not the same anymore, so we will have to recalculate it. And what we basically have also is a very interesting thing. If you look at the movement in the market went up, down, creating this M formation. And as you know, after an M formation, you expect the market to make a push to the upside. So basically, since you expect the market to make a push to the upside, we can go down on the daily time frame and see also basically you have a clear ICI, impulse correction and impulse. So you expect a higher high. From the weekly, let's take our overall upside target, because if the ICI is like this on the weekly, impulse correction, and you expect the next impulse, for the target you will have to take your Fibonacci on the retracement. So let's take our Fibonacci from the low to the high, and the minus 27 is here. The first strong number below is 1.2820. So this will be our overall upside target for this ICI to the upside. Let's go down on the daily. And actually it's most important to go down on the 4 hours, because we already know that we want to take our long. But yes, on the 4 hour the market is definitely in a very strong bearish environment. So there is no way we can take our trade anytime soon. The market is absolutely trending very strongly to the downside. The MACD line is, you'll not even see it because it's all the way here below. So the market is trending very aggressively to the downside. We need to wait for the market to shift. Okay, so the market is starting to shift to the upside. Let's see. Okay, sorry. I made a mistake and I pressed this. So basically the market is trending to the upside. And let's see if the environment, okay, the environment never changed. So basically we were never able to place our order here. Let's see what will happen next. We're still waiting for the environment to change. We want to see the environment of this market to change from bearish to bullish. At the moment it's still bearish. The MACD never changed. Okay, so this is the exact moment in which the environment of the market changed. The MACD went above the zero and the EMAs crossed for long. So let's look at which are the strong numbers at the moment in the market. So we already know that we have resistance here. From a structure perspective, this is previous resistance, now turn support here. Very simple to see it. Resistance, resistance, support. So the MACD is above the zero. The EMAs have crossed for long. So basically we have everything that we need to place our buy limit at this area. Okay, it's very simple. We only need to wait for the first retracement candle. Okay, so the market has started the retracement. We can take our long from here, and we will use a nice stop loss below the low that the market created. And regarding take profit, we already know it from the weekly. We have already identified our upside target at the 1.2820 zone. So let's see what will happen with this trade. Okay, it seems that we will get triggered. Okay, so we just got triggered. Let's see if it ends up a loss. Okay, So we can now go obviously risk-free on the trade. The market created a higher high. When you see the market create a higher high, then basically means that you can go risk-free on the trade. Overall upside target is there. Let's see what will happen. Okay, I will use the play because it's taking too long. Okay, so this is basically the market started to make a push. Now it's kind of changing environment again. Now this might simply be a daily retracement. So let's go on the daily and see what is going on from the daily time frame. So as you can see on the daily, we simply got our nice impulse followed by a correction. We still expect the next impulse to the upside, plus we have the possibility to create this kind of weird inverted head and shoulders pattern as the market has created an equal high. So let's see what will happen on the 4-hour time frame. Let's see if we can actually compound this trade, because if we get a valid entry on the 4 hours, we can compound the trade for an ICI to the upside. But at the moment, basically on the daily, we cannot, this is not an ICI yet. Why? Because at the moment, after the strong impulse to the downside, basically the market broke back below the structure area. So basically what the market did, went up, a little bit down, up, broke to the downside. So basically we have previous support to resistance here. So the only way in which we can compound the trade for an ICI from here is if the market basically makes a clear correction. At that point, we can take our long, because at the moment this correction was very sharp and broke back below a structure level. So we need to see more development. Let's actually monitor it from the daily time frame and see when we can be looking again for a long. So at the moment, as you can see, is clear impulse correction. With one candle we go down, 3 candles up, meaning that this push to the downside is stronger than the push to the upside. So we expect another leg to the downside. Let's see what will happen. Okay, so a new leg to the downside actually started. So at the moment it's just impulse and market started to consolidate, kind of creating a triangle formation. Let's see what will happen. Okay, so it broke to the downside, creating an M formation. Now, if the market will make a push to the upside, and basically close back above the neckline from a daily closing perspective, then we can definitely be looking for a long. Okay, so now is the time at which we have to go on the 4 hours and look for a potential entry, because we also have broken back above the previous the neckline of the M formation, which is now turned support, and we have the possibility to create this minor inverted head and shoulders plus a clean ICI strategy to the upside, and we already have one trade open. Let's see if we can compound our initial trade that is still running with another position. So at the moment, where is our entry? Okay, so I will not cover this, otherwise it is not clean. Okay, so where is our entry? So our entry is clearly here. Okay, we have previous resistance, which we expect become support here. So if the market will start a pullback, we can put our buy limit here. Let's wait the market to start a pullback. Okay, so we can now take our basically put our long here. We can take it at the 50, since this is the 50-35 strong zone. We can actually take it a little bit lower, because here is the support. So let's take it a little bit lower, stop loss below the low. So basically on the 50-35 strong zone, that is just above the structural level. So the previous resistance now turned support. So because the market obviously went up, down, broke above, this is what you expect. And regarding take profit, you will have a new take profit level. What do I mean by a new take profit level? Simply, the ICI, so this retracement will give you the take profit for the daily ICI, and you will let the weekly ICI run to the target. Okay, you will not leave both ICIs running the same. You will treat them as separate ICI strategies. Basically, that is what you're supposed to do. So you will take your Fibonacci from the low to the high of this new correction, and you will take your take profit at the first strong number below, which is 1.2680. Let's see if we get triggered. Okay, so we did not get triggered, and the market created new structure. What do I mean by the market created new structure? The market clearly created new structure because it basically tried to make a pullback. As you can see, impulse tried to make a pullback, broke above. So now on the retest of this area, we have again previous resistance, turn support. So if the market will now retest this area, then we can take a long from it. But we first need to wait for the market to start the retracement. Okay, so the market has started the retracement with the first candle. So, okay, so definitely started the retracement. So we can take our long from the 20-35 strong zone, which is aligning very well with the structure. So as you can see, 20.05 is lining up with previous resistance, which is now turned support. So let's basically look for a long opportunity inside of this area. Let's take a Fibonacci from the low to the high of this minor impulse, and for example, let's put our order at the golden ratio with a stop loss below this low and a take profit. We already saw it before. If we take our Fibonacci, we get 1.2680. I think, to remember that we actually get 1.2680. I'm not really sure. Let's check it out again. So taking my Fibonacci from the low to the high. Yes. So this is overall what we get. Let's see if we get a 1, 2, 3 risk to reward. Yes, we do get a 1, 2, 3 risk to reward. Perfect. Let's see if we get triggered. Okay, so we got triggered. Let's see if it ends up as a loss or the market goes to take profit. Okay, at the moment we are in a drawdown. Okay, the market closed back above. We still can't go risk-free. Very important to say, we still can't go risk-free on the trade. Okay, so basically this is the moment in which we can go risk-free. Let's see what happens. Okay, so now definitely, okay, so this was definitely a candle news. This was definitely a candle news. News came out, the market spiked, took us out break even. So this overall ends up being a break-even trade, but it's just manipulation. Okay, overall the direction we were right. Obviously the ICI wanted to complete. We are still running the first position, which is now running in very good profits. Let's see if we actually hit. Okay, so we hit take profit. So this one was a 1 to 7.9 risk to reward, almost 1 to 8. This one ended up break even, as well as this one here. This one ended up as a 3.1 win. Let's see what is evolving now, basically on the daily time frame, because at the moment the market made a very big spike to the upside. So we need to see basically what will happen around this area. It's very important to see what will happen around this area. So at the moment, I also want to check on the weekly what is going on. So on the weekly, the market is clearly rejecting this very strong area of previous support, now turn resistance. We need to see what will happen around here. Okay, it's very important to see what will happen around this area. From the daily, we can't be looking for longs because we are clearly at a resistance area on the weekly. So even if on the daily we have a clear ICI, we can't be looking for longs because definitely on the weekly we have very strong resistance. So we need to wait for the daily to align with the weekly, and then we can basically be looking for potential shorts when the daily will be aligned with the weekly. So it seems like at this point we can definitely be looking for shorts because the market went up, down, up, down, up, and formation, possibility to create a clear head and shoulders, and now make a nice push to the downside. So let's see if on the 4-hour time frame we are able to take a good entry here on a GBPUSD. So at the moment the market is above structure. The market is in a bearish environment, but we are at a support level that needs to break before we can be looking for a potential entry from this area. So let's see if the market will break. Okay, so now the market definitely broke this area to the downside, so we can take our short from this area here. Why? Because it's previous support, which is now turn resistance. Regarding stop loss, we will take our stop loss above the high of this very strong rejection candle. And regarding to our take profit, what we will be doing, we will be targeting the zone that we have identified from the weekly. So basically, we will be targeting the neckline of this overextended W formation. So we have a clear WM strategy on the weekly, and we will be targeting the neckline of this WM strategy. So of this W formation, sorry. So going down on the 4 hours, let's see basically how our risk to reward looks like. Okay, so it's a good 1 to 4. Let's see what will happen. So we are already in the trade. Okay, so this one ended up being a loss. So the only way in which you could have prevented this loss is by waiting for one retracement candle. But in this case, when you see the break that is so near to your actual trigger, you can't wait for a retracement candle. So this is because you don't have this space. Okay, you don't really have the actual pips to wait for a retracement, because the first candle will immediately trigger your stop loss on your entry. So in this case, basically this ends up being a loss. So 1 hour loss here on a GBPUSD, and let's keep going on the daily time frame and see what is going on. So the market keeps pushing to the upside, but there's not much that we can do at the moment. So the market made a nice impulse. This is good because from the weekly we have an overextended W formation. So we basically want to short it. Let's see what we get. So at the moment we don't have anything to actually short it unless. Okay, so one thing, we actually have it. At the moment we have the possibility to short because we have an overextended W formation on the weekly, and we have the possibility to create this head and shoulders formation here. So what we basically can do is take the short from the right shoulder. Okay, we can take our short from the right shoulder, stop loss above the high, and take profit all the way down. Let's see what will happen. Okay, so our order got triggered and we're stopped out. Okay, so this one ended up being a 1 hour loss. So let's see how things develop here on the daily time frame. So now we have a clear ICI to the downside. We have our impulse, we have our correction. We expect the next impulse to the downside. Let's see how we can. Let's see if on the 4 hours we can find a good entry. So at the moment, the environment on the 4 hour is bullish, so we need to wait for the market to shift the environment before we can take this short. Environment is still bullish. Okay, so this was clearly a news candle. Clearly a news candle, so nothing we can really do. But basically what we can do is realize we have to check one thing. Okay, there is one thing that we have to check. On the weekly, where is the real neckline? Because now we have created another impulse on the on the weekly, the impulse on the daily time frame. So let's see where the real neckline is. So here the neckline, the body is at 1.2540. So overall, we can be targeting 1.2550. So overall, the market has more room to the downside, and the market has created another impulse on the daily. So let's see if we will get a new ICI that we can use to take another short to the downside, basically for the last push to the downside that the market is supposed to create. Because after another push, we also have 1, 2, 3, 4, 5 waves, and after 5 waves, the market is supposed to start the next push to the upside. So let's go down on the 4 hours and see what is going on. Okay, so we definitely can't be looking for shorts yet. Let's see because we have to wait on the daily time frame for a clean retracement. Okay, we know that here on the daily we have our previous support to resistance at this level. Let's see. Okay, so the market clearly now retraced inside of the area of previous support, now to resistance, plus creating a clean impulse correction and impulse pattern. Let's take our Fibonacci from the high to the low. You see that they already retraced not only to 382, but to the 50%. So let's go down on the 4 hours and see if we can find an entry. So on the 4 hours, the market is currently above the EMAs. So there is not much we can do at the moment. We need to wait and see the market close back below. Okay, the market closed back below. And yes, okay, the MACD shifted environment to a bearish side. The EMAs crossed for short. Let's see where is our strong area. Here we have previous support, which is now term resistance, and it is in the 50-65 strong zone. You can see that this area here was the previous support. Now term resistance is in the 50-65 is strong area here on the 4-hour time frame. So let's look at how we can take this short. So entry from the 50, stop loss above the 78.6 of the Fibonacci taken from the high to the low. Take profit. We will use, we have to use basically the correction on the daily time frame for the impulse correction and impulse pattern. So minus 27 of the previous leg, and it basically overall we're supposed to target the 20. Okay, but we already know from the weekly that we expect a push lower. So let's target the minus 27, because otherwise we will not get a 1, 2, 3. Let's target the minus 27 because this looks like a very good setup on the daily time frame. And from the weekly, we already know that we expect a push even lower than this. So in this case, we can target a little bit lower just to make sure that we have our 1, 2, 3 risk to reward. But anyway, we're targeting above the minus 27. So we will be perfectly fine. We should be perfectly fine. At least let's check one last time on the weekly. We have a 1.2552 as the overall downside target, 1.2552. Yeah, so overall we're anyway targeting above the weekly target, so it's perfectly fine. Let's see if it will trigger. Okay, so keep in mind that we in this case we can place our sell limit immediately because the market is so near to actually triggering us. So but now the market went a little bit lower and started the retracement, so now you can definitely place your sell limit. Okay, so this was quite strong. This was quite strong. So the market went here and immediately triggered an order and started a big push to the downside. Now we are risk-free on the trade. Let's see if it will hit the actual target. Okay, so when the market goes this near to hitting your target, I know that overall, I mean, it's almost 100% that the market will actually trigger, will actually hit your take profit. But in general, when the market is so near to hitting your target and it starts a minor rejection, it's best to just close out. Okay, even if, okay, yeah, you anyway have a 1, 2, 3. So definitely it's best just to close out. Now, probably the market will definitely continue to the target, okay? But I mean, in this case, it's best to just close out if the market goes so close and then starts to reject, because it's, you know, you don't want to give back to the market all your profits just for a couple of pips more. So if the market does something like this, especially when you already know that you were supposed to target higher, because this was supposed to be our take profit, okay? And the first strong number above was 1.2620. So our real take profit was supposed to be here. But we decided to target a little bit lower to get a 1, 2, 3. But once you got that 1, 2, 3 and the market starts to reject, just close out, okay? So let's see, probably, okay, so actually I was quite sure that the market would actually continue to the target, but the market rejected, so actually was, yeah, but I mean, it's always a good thing to do, okay? If you get super near, you already have the 1, 2, 3, just close out the position. So let's see, at the moment, things will have definitely changed. Overall, from this area here, we expect continuation to the upside. 1, 2, 3, 4, 5 waves to the downside. On the weekly, we will have a retest of the neckline almost. Okay, so overall, basically on the weekly time frame, what you have now is a clear impulse correction, and you expect the next impulse to the upside. So we definitely need to look on the 4-hour time frame if the environment of the market will change. So if the environment of the market will remain bearish, then overall the market will continue with another push to the neckline. On the other side, if the environment of the market will change to bullish, then basically we have a clear ICI on the weekly. we have a very clear impulse correction, and you expect the next impulse on the weekly. So we have a very clear ICI on the weekly time frame to trade, so to the upside, but we need to wait for the environment of the market to change from a bearish to a bullish market before we can basically take this trade. So let's see if the environment of the market will change. Okay, so very near to changing, very near. Okay, so this is the exact moment in which the environment of the market changed. So the EMAs crossed for long, the MACD crossed for long. Let's look where we can take our entry. So what you clearly see is that we are in the 20.05 strong zone, and we have our previous resistance, which is now turned support, which is at the same area. So we can be looking for a longs from this area, which is the previous resistance, turned support. Stop loss must be below this area here, which was the low. And actually, let's use even a wider stop loss, okay, just to give our trade some room to breathe. So basically, considering this as a full impulse with a stop loss below the 78.6, just to be more relaxed, since overall we have anyway a very big take profit, because this will be all the weekly previous leg, okay, all the weekly retracement is this. So basically our take profit, if we take our Fibonacci from the low to the high, will be all the way at this minus 27, the first strong number below, which is 1.3150. Okay, so overall we are targeting all the way to this area. So let's see what kind of risk to reward we get. Okay, so it's a 1 to 7 risk to reward. Let's see if the market will trigger our order. Okay, not yet, and things changed in the market. Okay, the market didn't trigger our order and things changed. So we need to adjust our order, because we have now previous resistance here, which is turned support. Same concept as before, previous resistance, which is turned support. So we need to adjust our order here. Stop loss, in this case, we will adjust it below this low, since now the market definitely has a room anyway to breathe, because our stop loss is protected by this low here. And the target obviously remains exactly the same. Okay, nothing changes from a target perspective. Okay, so now we definitely got triggered. Let's see what will happen. Okay, so at the moment we are running in a drawdown. Okay, so this is the exact moment in which you can go risk-free, as the market broke back above the high. And let's see if the market will actually hit our target. So at the moment the ICI is definitely completing. Now at the moment I expect a retracement. Why? Because I can already see from the 4-hour time frame that I will have a clean W formation on the daily, because if it's clean on the 4 hours, then on the daily it will be even easier to spot it. And yes, as you can see, basically on the daily we have a very clear down up W formation. So we expect a retracement and then the next push to the upside to start. So we have several options when it comes to this retracement, because what we could do is basically a short, keep our long open, because overall we have an ICI from the weekly, so we're supposed to treat that strategy separately. On the daily we can short this WM strategy, and then we can long for another ICI strategy to the upside. So at the moment we have to keep our long open, obviously risk-free, and we can be looking for a short opportunity. But the market is currently in a bullish environment, so we need to wait for the market to shift environment to the downside. So let's see when the market will shift environment. Okay, so the EMAs have crossed, but the MACD is still above the 0. Okay, but actually we cannot be looking for shorts, because we're already too near. We're already too near to the neckline. Okay, because the neckline is here. Unfortunately, we can't be looking for shorts, because we wouldn't get a good risk to reward, because it's impossible to get a 1 to 3 because our target is too near. unless obviously we go a little bit higher and then we can short from a little bit higher, but it means that then we would get our valid entry from there. And anyway, the environment of the market is still bullish. I mean, it still didn't change. Okay, so basically we cannot, there is no way we could take the short. The market didn't give us a short, the environment changed only here. And obviously we cannot be looking, because now we're supposed to short from this support and resistance, but we're shorting from here to go to here. So there's no way we would get not even, I mean, a 1 to 1.2 risk to reward at maximum. So basically we cannot be looking for shorts, but we can be looking for longs. We can compound our trade because we have it now impulse, correction, and you expect the next impulse to the upside. So basically we can be looking for another impulse to the upside. We just have to wait and see what will happen. I think probably okay. So overall the market actually decided to go for a retest of the neckline. So overall the market actually succeeded in completing the W formation from the daily. We have to wait. We have to wait and see what will happen. If the market will break the neckline, that it will be a break-even trade. On the other side, if the market will decide to respect the neckline and respect impulse correction and impulse that we have on the daily time frame, then on the 4 hour the market should change environment at some point. We need to wait and see what will happen. Okay, so the environment of the market changed. Okay, so the environment of the market changed right now. The EMAs have crossed for long and the MACD has crossed above the zero. So what we need to do basically at the moment, we need to wait for the market to give us a valid entry. But at the moment, the market has broken this counter trend line and we can expect the market to make a retracement to it. Okay, a retracement to this counter trend line before continuation to the upside. Plus, if you look, we have also previous resistance to support at this area. Let's see what numbers, strong numbers we have. So we have 0.5, this will be 0.5, and this will be 20. So we are in the 20.05 strong region. We can be taking long from here with a stop loss below the low the market created. As you can see, the market went up, down, and you expect continuation to the upside. And our take profit, we won't use the ICI from the weekly. We will use the take profit of the ICI from the daily because there are two separate strategies. One is on the daily and one is on the weekly. So on the daily, we will take our Fibonacci on the daily previous leg. The target will be the first strong number below the minus 27, which is 1.3080. And this is the basically level that we will be taking our trade from. This is the exact candle at which you can be going risk-free. As you can see, the market went for a perfect retest of this counter trend line and then continued to the upside. So I went for a perfect retest of the level. And now we are continuing to the upside. Let's see if the market will actually hit both our take profits. So the first take profit is hit. The ICI from the daily hit take profit. I want to see if the market will hit also the ICI from the weekly, which has a 1 to 7 risk to reward. Very interested in seeing if the market will hit the level. Okay, so it made it. So overall, both trades hit the targets, which is very, very good. Okay, so let's keep going. Let's see what we have here from a daily perspective. So at the moment, there is not much that we have from the daily. On the weekly, not much. On the monthly, we already know it. Basically, we don't have much on the monthly. The market just made a huge impulse to the downside. You don't have any information on this retracement. Let's see what is going on. So at the moment, nothing you can really do. Okay, the market isn't showing anything. Let's just keep going with the price action. Okay, so at the moment, the market created a quite strong pullback. but still nothing you can really do unless the market creates basically a nice retracement, and then you can be looking for another impulse to the downside. Okay, that is definitely something that we can do. On the weekly, situation is unclear, but on the daily we could get a clear ICI, okay, impulse correction, and you expect the next impulse, plus you get a nice head and shoulders. Let's see if we will get a retracement. No, the market never created a right shoulder. So now market created another impulse to the downside. At this point, on the weekly, still nothing really interesting, except the fact that basically we have this trend line here, which is broken out to the downside, so confirming that we can be looking for an ICI to the downside on the daily time frame. Let's see on the daily if we will get an ICI to the downside, because at the moment, as you can see on the daily, the market went down, made a retracement, broke to the downside, started a new retracement. We need to see basically if we can take this pair for another push to the downside. Let's see if we can do this. So on the 4 hours, let's see if we will get a valid entry. So at the moment, the market is above the EMAs. Okay, did the market retrace to the 382? Yes, so we can be looking for a short. Okay, we can definitely be looking for a short if the market retraces to this level, which is the 80-95 strong zone. We can put our stop loss above this high and take profit. In this case, since the market retraced only to the 382, we can take our Fibonacci from the high to the low, so no need to adjust it, and we can take our take profit at the minus 27. Okay, let's see if we get a 1, 2, 3. No, we do not get a 1, 2, 3. Okay, it would be extremely risky. We could do something like this. Okay, decrease our stop loss just to be above this high. We can do it. Okay, we had some good winners, so let's do it. It is a little bit more risky, but let's do it. Okay, so no, the market never actually hit our entry, so we never got in the trade. Let's see what is going on here from a daily perspective. Nothing very interesting at the moment. The market looks bearish from the weekly. Definitely looks bearish from the weekly. Left shoulder, head, right shoulder. So it looks bearish from the weekly, but on the daily it looks bullish. So those are the situations in which basically you need to stay on the sidelines, because you have also clear resistance towards support here. So you need to stay on the sidelines in these situations. Let's see what will happen. Okay, the market is actually exploding to the upside, definitely exploding to the upside. Didn't give us any kind of opportunity to take it. So basically we cannot be looking, we couldn't be looking for any kind of longs here, because the market didn't give us the opportunity. On the weekly, it definitely looked short. So at the moment, where are we? Okay, because at the moment the market is definitely overextended to the upside. So I will definitely be looking to short if the market gives me something that confirms in my short view, which it is giving me. Because if you look here, we have a previous support to resistance here on the monthly time frame, plus impulse correction, and you expect the next impulse. So we have an ICI on the monthly with retest of previous support and resistance. Now the exact previous support and resistance is this one here, but this is definitely a strong level, okay, because the market went here and just rejected extremely hard. So we have resistance and impulse correction and impulse on the monthly. I want to take my Fibonacci from the high to the low of the monthly and see what we have. Okay, we are currently above the 50%, which is lining up very well with the previous support and resistance, but this monthly candle hasn't closed yet, so basically it can still close below. Now on the daily and on the 4 hours, obviously the environment will be bullish after a huge push to the upside like this. So we definitely need to wait and see what we will get. Okay, so that is, actually I went too fast, because this is the exact moment in which the market, actually this is not, this here is the exact moment. This one is the exact candle in which basically the market changed environment from a bullish market to a bearish market, as you can see. So now everything is on the 4 hours, the environment is bearish, and you have very strong resistance actually at the 80, 95 strong zone. Why? We have support, 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 and support. All of that support is turned resistance. So basically you can be looking for shorts in this region with a stop loss above this high. Take profit, I don't know. I don't know because I have to check. So basically on the weekly, we have a clear take profit zone, which is this one. We can be taking profit at the, this is the first take profit that we get from the weekly. Now on the monthly, we want to see the push to the downside because we have the ICI on the monthly. On the weekly, this is the first support that the market will find. So let's target the first, you're supposed to target the first support that the market will find. So let's see if we get a 1 to 3 to the target. Okay, so we do get a 1 to 2.3. What happens if we put our stop loss above the 78.6? Okay, so we can get a 1 to 3 and our stop loss is still above the 78.6. So everything is perfect. Let's see. Okay, this first push to the downside, we have already seen it. Let's see if it ends up being a break even or it actually works out. So it seems the market is finding support at this area here, which was a previous support, which was basically a structure area here. You can see the market stopped here. So the market is reacting to it. And probably a break even. Probably will end up break even. Okay, so actually it is ending up as a winner. The market just faked out, everybody started buying here. We were obviously risk-free, so we didn't really care. But definitely the market showed to everybody that they wanted to go long, and then obviously took them all out, went to our take profit. So let's see what is going on. If something actually changed from a daily perspective, what kind of price action we are getting. And on the daily, there is nothing very interesting. We do have the possibility to create an impulse correction and impulse to the downside. Let's see if on the weekly we have something against it. Okay, so unfortunately, yes, we do have something against it. We have this clear impulse correction and impulse to the upside that we expect in now from the weekly time frame. So on the monthly, we have ICI to the downside. On the weekly, we have ICI to the upside. On the daily, we have ICI to the downside. So it's kind of one of those situations in the market in which it's best to stay on the sidelines. Let's see what is going on here. So the market seems to be shifting to the upside, but we do have the ICI on the monthly to the downside. So nothing much that we can do at the moment. We have a W formation now. We have a clear W formation. You have down, up, down, up. It was already easy to see it from the weekly. So we have a WM strategy to the downside at the moment, so which aligns basically with the ICI from the monthly. So let's go on the 4 hours and see if we can basically find an entry for this ICI to the downside. Okay, so the market now shifted environment to a bearish market, so we can be taking our short with a stop loss above the high. The market already retested previous support, turned resistance. Let's see where the neckline actually is, because I don't know where we have to take profit. So it is here. It is so at best we could be targeting the 1.3280. 1.3280 at best. It is a target that might not hit, but this is what we could be targeting. No, there is no way we can take this trade, because anyway the stop loss must be above here or it would be too risky. So we cannot take this short. Let's see if it actually works out. Okay, so anyway, it didn't go to target yet. Okay, so basically this is what the market did from a daily perspective, it clearly went for a retest very near. I mean, it is not, the neckline is never a precise zone, okay? It's this zone here, the zone of previous resistance, now turns support. The market went for a retest of it. You have impulse correction. You expect the next impulse to the upside. And overall, we will be continuing in the next video, since we finished 2017 for a GBPUSD. And basically, yes, that is what we have for 2017 for GBPUSD. So what we have was here the last trade was 1 to 3 risk reward, so 3R, 3R, 10R, 13R, 16R, 15, 14, break even, 21, break even, 24. Okay, so this is basically what we have for GBPUSD 2017. I want you guys to go and backtest this again on your own and see if you basically are able to spot the same opportunities, because these are the opportunities that there were in 2017, applying the strategies on all time frames on GBPUSD.